Hey there! What is going on here, Facebook? It is Brian Sinkoff, broker owner of Sinkoff Realty Group, alongside Drew Aiello, Fairway Independent Mortgage, and we are at the Sinkoff Realty Group office right here in Delmar. Drew,
good afternoon.
What it is? How are you?
Be here. Look at that. Look at that, folks. The new Sinkoff Realty Group.
By the way, chat, if you comment or ask a question, I will send you a Sinkoff Realty Group mug in the mail.
Hey now.
First thing. Of course, if you already have received one, you're ineligible. But if you did comment, I'll give you a mug. All right.
Nice.
Drew, we have not. I was looking back in my files. We're in the conference room right now, the Sinkoff Realty Group.
Love it.
But I was looking back in the files. Let me scooch it back.
A lot of deals getting done here.
Scooch it back here. I was looking back in the files, in the archives of the Sinkoff Realty Group and our social media. We have not done one of these since December, I believe, 27th.
Yes, we did it between the Christmas
and the New Year
holiday.
So, and let's, can we get a thumbs up out there if you can hear us? Let's get a thumbs up. Can you hear us? And I will check here as well.
Check 1, 2.
I want to just check on my thing. Can you hear us? Can you hear us? Yes or no? Can you hear us?
Oh, there's a thumbs up. I like that. Thank you.
Okay, good. We're in. All right. So we're going to discuss the housing market. Drew, scooch it over a little. We can tell this is a great.
Uncomfortable?
It just looks better. This is a great rehearsal. It's a good thing. We're going to get back a little later on Facebook Live and do the real thing. This is live, by the way. So we're going to talk to you about the housing market. What we've seen in the last couple of months. I think what's maybe ahead, and Drew's going to talk a little bit about the mortgage rates, the interest rates, and just kind of give you a bit of a lay of the land on where we are and what we can expect moving forward. What's up there, Anthony? How are you, buddy? Anthony's a good dude. What's up to him? So
he wants a mug.
Yeah, Anthony already got a mug.
Oh.
So again, if you're just joining the chat. If you want a mug, you can comment right here, and I'll send you a mug. Send me a DM or just say I want a mug, Sink, and I'll give you a Sinkoff Realty Group mug. It's quality mug, dude. Seriously,
100%.
Quality mug. So
I have a cabinet full of them.
All right.
Beast Boys. I got them all.
Yeah. So let's talk a little bit about the market, Drew. You and I we've been in, as we like to say, the real estate salt mines. We've been in this for a while. You over 20 years, me over a decade. I don't want to say we've nailed it. We've been doing these for the last year or so.
Oh, yeah.
But we've been pretty accurate with sort of our predictions and our take and our thoughts and sort of when to hold them and fold them. And we had said back in the fall, the rates were going to go down, and when the rates went down, there's going to be more buyers. So just if you can sort of, where are we today in 2024 in terms of rates and where you see things on your end, the mortgage side, and then I'll talk a little bit about on my end, the buyer side.
Yeah. So looking back at 2023, I made three predictions. 2, I was spot on. 1, not so good. 1, inflation, I thought that would be near 3%. We hit 3.1% back in June of last year, so that one was great. House appreciation for 2023, we were estimating about 6.5%, 6.8%, and came in right about there for the year. So that was good. Interest rates, I was way off on. And
I think we all were, though.
A couple of things, yeah. I thought, honestly, that interest rates would be closer to 5% by the end of 2023. Obviously, we're way off on that. They were, upper 6s, 7% at the end of last year. And a lot of that had to do with some sticky inflation. A lot of it had to do with a hotter than expected employment market, how they recalculate a lot of the employment figures. So we got messed around a little bit with how the government started redoing their numbers. But anywho, for this year, 2024, still expecting 4.5%, 5% appreciation on real estate. Inflation has come down. I think you're going to see a 2 handle at any of these next upcoming reports over the next 2 months. And again, when we start seeing, instead of 3.1 or 3.2 inflation, we start seeing a 2.8 or 2.9 inflation, that will be really good for the markets, really good, because then you'll see interest rates come down. In addition to that, We think we still will see this year rates come down at least a point. And right now they're in the mid to upper sixes. So it's not bad, not as bad as last year where we hit 8.25 in October. So rates will be trending down. We're probably not going to see the Federal Reserve lower their interest rates in March meeting. You may be looking at a May or June meeting before the Fed starts bumping down rates. The biggest thing that they are focused on right now is the labor market. They need to see a little more softness in the labor market before they start to be somewhat aggressive in stimulus and lowering interest rates. So that is the last shoe to drop to make them feel comfortable going forward in 2024.
And we should point out, people, these are all things that Drew and I and everyone out there really can't control. It is what it is. What I like to say is what we can control is when you start looking for a home and how you're going to get that home in a very competitive market. We said, and again, I've made phone calls to all my clients sort of on the fence and explained to them, hey, if you're on the fence, Brian, you know, what's the biggest objection I hear? Brian, we're waiting for the interest rates to drop. And you know what I say to that? Well, guess what? So is everyone else.
Right.
And that is just going to be, you have all these buyers, and we've talked about this. You go back to the fall of these Facebook Lives. We talked about this last fall. You have all these buyers sitting on the fence, waiting for Godot, as I like to say. Yep. And then all of a sudden the rates go down to 6% or low sixes, and then you have an influx of buyers that are on the market in a very competitive market, and now the buyer that didn't want to quote unquote get into a bidding war is now in a bidding war with twice as many buyers. So I have routinely said, you know, there's no time better than the present to work it out, to start doing it, and that time is now, because the rates are still pretty good at 6.5%, and if you wait till they're low sixes, everyone is waiting, and it's just going to be very competitive. I had a buyer say to me last week, Brian, I don't want to get into a bidding war. I don't want to pay more than the asking price. And my response to them was, you may want to keep renting, because I don't know that that's going to end anytime soon. Let's just rewind.
This is what I prepare for people when they don't want to get into.
You covered the name, correct?
Yeah.
Okay.
Positioned.
Because that's real.
Right here.
Yeah.
This is a recent buyer. Brian went to contract with this individual last week, I believe, or the week before, and he didn't want to go. I think it was a $469,900 purchase price. End up getting the house at $499,000, and obviously that and I'm sympathizing with the general public. That is not an easy thing to
make sure you just tell everybody what we spent on a house that's pending, Drew. Thanks a lot.
So it's not an easy thing to wrap your head around. But when you look at the facts and you look at the cost of waiting, this individual, if he just waited 6 months, would cost him an extra $27,000 on this house.
Because the house is appreciating,
and all the things that you're talking about. We start seeing a 5 handle on rates. People come off the sidelines. Houses get bid up, higher values, more buyers, more competition. If this individual wanted to wait another year, it would have cost them $32,863 in appreciation and costs. That means not only would they lost $26,000 in appreciation, but they'd have to fork out an extra $6,000 with the down payment differential that they would have had today versus a year from now. And
also, let's not forget that person, if that person, in this case, we know that person was renting, that's also throwing away more money in you know, as they're renting per month, sort of waiting for the market to go down or the rates to go down. And when the rates go down, the prices are simply going to go up. So what I explained to that buyer, and I know Drew's going to get into this a little more in terms of the raw numbers, but what I explained to that buyer is I did just a simple explanation of here's where the house is, here's where I think you need to be to get the house, and here's why. Well, Brian, it's too much money. Okay, well, you know what? The best thing I could say is, can you envision yourself in the home? Do you envision yourself raising your family here? Do you want your kids to be in this particular school district? And he said, of course. And I said, well, guess what? The rest of the market does too. And that is supply and demand. And it's a simple thing. And if the real estate market appreciates even at 4%, your home every year goes up 4%. Waiting 6 months means you're going to be paid 2% more. That doesn't seem like a lot on paper, but as Drew said, that can be an additional $6,000 out of pocket the day you close.
Right. And in this individual, once again,
you hide the house, dude.
Covering up the innocent. You could see that.
You can really see that really well from here.
They went.
You can really see that, Drew. Get out your binoculars and your abacus.
They went over ask by about $30,000. And you might think, oh boy, but this is a family that has a child. They're probably going to have more child. They don't plan on moving.
They have 3 children, yeah.
They have 3. They don't plan on moving for at least 7 years. Their break-even point is just under 15 months. And you know what? In 5 years, this house will be worth $82,000 more than what they bought it for.
Today.
Right. So really good analysis that we can do that puts factual. Obviously, there's emotional responses to buying a house, but when it comes to the facts, the numbers don't lie in this market. And I'm not using anything crazy in terms of appreciation. I'm looking back the last 60 years of appreciation in this area. Nothing nuts like we saw.
Yeah, not 20% appreciation.
Yeah, I think it's 4.1.
We always have said 3 to 4% is the average appreciation in a normal market.
Right.
And again, I just explained to the buyers, I think the one thing about me in terms of working with me, and those of you that have worked with me and Drew, we're kind of straight shooters. We're going to tell you the way it is. I'm not here to sugarcoat the market. I'm not here to sugarcoat the situation. What I am here to do is tell you the reality of the real estate out there, and we do it every day, and we see every day what is happening. And when I say, hey, here's where you kind of need to be, that's this is based on what I've studied, what I know, and where the market is. And yeah, it might suck to stomach that and have to go that much over asking, or to be in a position where maybe you didn't want to spend more than you want. But I take myself back, and I always, and I think one thing that I like to say about myself in this industry. Bless you. One thing I always say to myself, what was that, by the way?
That was your computer.
No. One thing I always say to myself about this industry is I always put myself in the buyer's shoes because I've been there, right? And my wife and I, when we purchased our house.
It's just my alarm going off at the house. It's fine.
Yeah, no worries. Just someone broke in.
No, there's a sheriff there, but it's fine. No problem. Let's keep going. all good, folks.
Yeah.
Nothing to see here.
Yeah, just feel free.
No stress.
Yeah.
Look at the fireworks.
It's all good. Just the sheriff's office and 7 FBI agents. This is a prowler on the loose. All jokes aside, is everything okay?
I think.
Wait, there is a sheriff at your door. You're not kidding.
I'm not kidding. I'm not making the stuff
Dude,
up.
Do you have to take a call?
We'll see if they call me. I think a door blow open with the alarm on.
Okay.
I think we're fine. Nobody's home, so.
Reason why you should have an alarm when you purchase your home. Get that ring.
Reason why you should shut the doors when you leave.
Yeah, feel free and lock them.
Yeah. I don't know, kind of basic. I learned that in 2nd grade.
Yeah. So getting back to what I was saying, I always put myself in a buyer's shoes. I always empathize with the buyers because I was once a buyer, right? My wife and I were buyers. You were a buyer. So I said, look, I said this to my client who Drew just gave the examples to. I said, look, my wife and I, our budget was a certain number when we purchased in 2015. We went $50,000 over that budget because we knew we found the house of our dreams. We knew it had everything we wanted. It checked off all our boxes, and we were going to do whatever it took to get into that home. What did that mean? That meant not eat out as much. Don't take the crazy vacations. Oh, I'm getting a call.
That might be the alarm company trying to reach me.
Yeah. Because they're watching the Facebook Live as we speak.
They're finding us.
So what I was saying was we said we were going to do whatever it took, whether it was going to eat out less, not go on vacation, just tighten the belt a little bit to make that house work because it had everything we wanted. And that's kind of what I was explaining to my buyer, and I do this all the time.
I'm just going to step aside.
Yeah, Drew will do that, and I'll We want to make sure that the sheriff's office didn't show up. Drew's making an emergency phone call here during Sound Off with Sinkoff, the mortgage edition. But what I was going to say is we tightened the belt loop a little bit. We made sure that we were able to do what we wanted. But the point of it all is we knew that the house checked off all our boxes. It had the finished basement. It had the 4 bedrooms. It had the nice yard. It had the fenced-in backyard. And we said, this checks off all the boxes. And we know, and as I've always said, if it checks off all the boxes for you, it's probably going to check off all the boxes for other buyers out there, which leads to competition. And that is sort of the genesis, the point of our podcast here today is just the fact that you have to sort of, if you want something, you have to pay for it, and that's just the reality. Now, Drew is going to talk about, once we know his family is safe, and we're not making light of this. He says no one's home, and he thinks the garage door just blew open, or a door just blew open. But once we get Drew back in here, he's going to talk to you a little bit about not only the appreciation, but he's also going to talk to you a little bit about the interest rates, where they are, where they're going, and different programs to get you in to a house for maybe what you see as the interest rate out there as it stands today versus some programs that Fairway Mortgage has to help you get into that home for a better interest rate. So he's going to speak to you about that in terms of buy downs, 7-year ARMs, things of that nature. So that is where we stand there. Drew, are you okay?
I think we're okay.
All right, what happened?
I think I was correct. The door blew open and set off the alarm.
All right. So everyone's okay?
Yes.
All right. Your wife's not home, is she?
Nobody's home.
Okay. Good.
Just the dogs.
Just the sheriff.
Just the dogs.
Who's with flashlights and guns drawn.
I could see them on my camera. They're watching ESPN.
Yeah. Guns drawn and the flashlight, like Resident Evil.
Yeah.
Okay.
It's all good.
All right.
Sorry about that.
So, Drew, what I was going to say is I talked about my wife and I. We knew what we wanted to do. We tightened up we tightened things up because the house checked off all our boxes. But what I say, when it checks off all our boxes, it probably checks off everyone else's boxes as well. Right. So that leads to more competition. And I think that is what's so important in this market.
And I think you've been handsomely rewarded for taking that leap when you bought the house.
Yes.
And that's what I think we're trying to express here is, yes, sometimes you got to do things that are uncomfortable, but usually it works out for your benefit. And
one thing I was going to say, and I was going to say this a little earlier before you had your alarm scare, was that, in any market, right, houses that are priced right in a desirable area, and that's not for me to decide in terms of fair housing, that's for you or the market or you looking at the school districts to decide what's a desirable area. But those houses priced right in a desirable area are going to sell in any market.
Right.
No matter what the interest rate is, no matter what the economy's doing or any of that type of stuff. They were selling like that a decade ago, and they're going to do it today. Right. So, Drew, I want you to talk about, and I know this is for informational purposes only when we discuss rate, but what are some other options maybe people can get into a home for maybe a program you guys have that can help people out there?
There's a couple things. So my job has become, obviously we get people pre-approved and pre-qualified. That's easy. I think any loan officer in the Capital Region can do that. But my job seems to be, how do I make my buyers more competitive? How do I make my buyers rise above the competition to get their offers? Obviously, you got a great real estate agent. That's A. Then it's my job.
Are you talking about me?
I pointed to.
Oh, okay. Thank you.
I wasn't doing a thumbs up. I was.
Yeah. Gotcha.
You got a great real estate agent. That's great. Second is, okay, what do I have to do right now to make the payment affordable until I can refinance in 2 years? So there's 3 programs that we're doing in regards to the rate, and there's 1 program we're doing in regards to getting your offer accepted over and above the competition.
And I will interrupt you 1 second. This is so important because in an environment where there's 2, 3, 4, 5, 6, 7, 8 offers, not only is it important that you're working with a professional like myself, that the other side, the listing agent, is going to know that we're going to get to the closing table, but they also need to, the buyer, the seller, and the listing agent need to be confident that this is a qualified buyer, and having less contingencies and less things, roadblocks in the way, it's just going to make it a more attractive offer. So continue, Drew.
You have to stick out amongst the crowd, bottom line. And obviously you can stick out by raising your purchase price to the moon, or you can stick out in other ways. So first thing, in the world of getting pre-qualified or pre-approved, here's how it goes. You call me, you tell me what your income and assets are, we do a pre-qualification. Then you send in your pay stubs, W-2s, tax returns, bank statements, and then we can upgrade it to a pre-approval. 99% of the people out there buying a house right now will come to the closing, or not come to the, will make an offer with a pre-approval. So again, 99% of the people have that. It's nothing really special. The next phase is getting a full-blown commitment letter. So I'm recommending in this environment, get fully committed. That means you apply for your loan, an underwriter underwrites your loan, they issue a full-blown commitment letter on your loan, and you're saying, well, what do you mean? I don't have a house.
Right.
They're actually giving you a commitment letter with TBD, to be determined, for the property address, because you don't have a house yet.
But it's based on a purchase price
First
number, correct?
Right. If you say your budget's $450, then we do it at $450. You want to do 10%, 15%, 5% down. That's how we do the commitment letter. Fully underwritten by an underwriter, they issue this piece of paper that looks just and is actually a commitment letter that says, you, Mr. Buyer, are fully approved to buy a house. That means your pay stub, W-2s, bank statements, tax returns, everything's signed off on. When you make that offer to the seller knows you already have your financing. You don't even need a mortgage contingency. All you need is an appraisal and title, and you can close. So you could literally close in 2 weeks if you wanted to.
Now, Drew, let me ask you a question, because I know people are probably thinking what I'm thinking, and that is, how long does that take? And I don't know the answer to that.
It takes a couple weeks. It depends, when you say how long it takes, it usually has to do on the client. How soon can they get in the pay stubs, the W-2s, the bank statements, all that data that the underwriter needs to make a decision. So if you do it really fast, within 24 hours, you'll have a full-blown commitment letter in less than 5 days.
And let's explain something, because I get a lot of, and we need to talk about the spring market as well. Write that down so we don't forget. We can end with that.
Number one on my list.
Okay. When I have a buyer reach out to me, you can see we've prepared really well. When I have a buyer reach out to me, one of the first things I do is I get to know them a little bit. What's their wants, what's their needs, what's their why. But I also make sure the first thing we do is get them pre-qualified. Put them in touch with the mortgage lender to make sure that they're pre-qualified. Because look, there's no sense in not even wasting my time. It's actually, you don't want to, we're wasting everybody's time. Why should the buyers be dreaming about a Lamborghini when they can only afford a Toyota Corolla from 2001? Like, we've got to make sure that they are pre-qualified and looking at houses that they are comfortable financially to purchase. So we always do the first step in the process is putting them in touch with the mortgage lender, and then step two is once they get that going, is sit down and meet with me in the office where we go over the buyer process from A to Z. But my point is when you make that initial call, they contact me or I contact them, we automatically get them in touch with the mortgage lender, and that process that Drew just spoke of can be done even really before we start looking at houses.
And I'm going to take it one step further.
Do that.
So you have a full-blown commitment letter.
You got it.
In our commitment letter, we have a cash guarantee. So
what you talking about, Willis?
What this says is that if for some reason our buyer can't come through with the financing on your house, Mr. Seller, we will pay cash for your house, or we'll give you $10,000 and you can go sell the house to somebody else. So the seller has zilch risk in taking your offer compared to anybody else's on that group. So when you're getting beat out by cash offers, this is the next best thing that you can do to a cash offer without having a boatload of cash laying around. Mm-hmm. So gives them a cash guarantee, gives them a full-blown commitment, tells the sellers that you can close in 2 weeks or less. There's literally 1% of the population is probably doing that right now when making offers. So really want to step up your game. You do a little bit more work in the front. When you get an accepted offer, you're going to have to do all that work at the end when you get a contract. So it's whether you do it now or you do it.
It's got to be done.
An offer. Why as well get it done, out of the way, done. Then all the stress is out of the equation, and you go make the best deal that you can for yourself.
And what's that called again?
Cash guarantee.
And what was the getting the
commitment letter
before we sort of even quote unquote start looking at homes?
Get a commitment letter before you even have a house.
Those are awesome. A couple more things you want to point out in terms of your programs?
Well, in terms of the rates, so yes, I get the question a lot. I'm going to wait till rates come down. Well, we know what
Take
Brian
a number.
Just said. We really don't want to wait till the rates come down, because then your life will be a total living hell in terms of trying to get an offer accepted. So right now, we're going to say this again. We've said it 472 times. Marry the house, date the rate. And what I mean by date the rate is you know that the rate is going to be temporary. You know you're going to refinance in the next 24 months. So we have a few programs. You can do a 1-year buy down, meaning if rates, say, for example, are 6 3/4, the first year you'll be at 5 3/4. We can do a 2-year buy down. First year you're 4 3/4. Second year you're 5 3/4, and then you end up at 6 3/4 if you haven't refinanced by then. Those are fixed rate programs that make people feel very comfortable. You can also do an adjustable rate mortgage, or aka known as an
ARM.
ARM. And right now those are in the high 5s, and it's fixed for 7 years. So it's a 7-year ARM in the high 5s. So we just recently had a client together. The payment was a little bit uncomfortable for them. It was out of their budget on a fixed rate.
Yes, this just happened.
Right, we dropped them into the ARM. They saved $336 a month, and then it got their payment pretty close to what their budget was for on that house.
And a very happy client.
And you could see the stress come off themselves. So it was a really good program. 1-year buy down, 2-year buy down. Look at adjustable rate mortgages. All great programs depending on your comfort level, where you see interest rates going in the future. But again, you want to get into a house as soon as you can, just to avoid the masses. And obviously, over the next 2 years, we think you'll probably get 10% appreciation on that house. So might as well get in while you can and try to make the payment as affordable as possible.
All right, so let's, everybody talks about the spring market. Brian, when's the spring market start? The spring is the ultimate time. Again, these are just sort of myths, real estate myths. The spring is the ultimate time to list a home. When does the spring market occur? Well, I always say it's dictated by the weather. So whether it's now or in late March. So what has happened, and this is literally crazy. I'm going to tell you this story. It's kind of mind-boggling, and it's fun at the same time. We've had amazing weather, right? There's largely, for those watching in the capital region, you probably don't even in the hill towns, you don't have a whole heck of a lot of snow on the ground right now.
I feel like we had 2 weeks of winter so far.
Yeah. Maybe the hill towns, you still have 4 feet, but it's the hill towns. I love the people in the hill towns. What's up, Bern? What's up, Knox? What's up, Westerlo? Peace. That was ridiculous. Anyway, so
or goofy.
Yeah. So we don't have snow on the ground. It's getting lighter later. And people think about how you feel right now. You look outside, the sun's out. There's no snow.
How about when you leave work? It's
still late daylight. Like, you're in a good mood. Typically, in a normal winter, that happens mid to late March, right? You may get a couple of snowfalls in March. They melt pretty quick. End of March, I always say that's kind of like the spring market when it starts. I think the spring market has started, and I think it started in the last week.
I don't know on the listing side, but I know it started on the buyer side.
Well, I have a lot of actually, and this will go back to my story that's crazy. I have two people reached out to me. They want to list their house now. So I take and I was never a big nap fan. But I hated naps.
I think naps should be legal.
I hated them. I think
every day at 2:00 we should be able to take a nap.
Well, it's a siesta, right? Isn't that what it's called?
Well, we should go that's what the Italians do. Right?
Yeah. So I used to hate naps, right? But I work out really early in the morning. Admittedly, my dog wakes up every night at like 2 a.m, and she goes out for a pee, and it wakes me up, and then so my sleep is like I never have a full night of sleep. I don't even know what this has to do with Sound Off with Sinkoff and real estate, but it's story time with Sink, right? Story
we
time.
We have alarms, dog doing pees.
Yeah. Literally, the sheriff showed up at Drew's house in the middle of the Facebook Live
at the precise moment that we're doing Facebook Live.
Right. So that was crazy. Everything's okay at Drew's house. If you're just joining us, the sheriff's office came to Drew's house with not guns drawn, but they were knocking on the door. He had an alarm tripped from wind or something, and the door opened. It was all good. By the way, if you're just joining me and you'd like a Sinkoff Realty Group mug and you did not get one at the holidays, You can comment in this post, send me a DM, and I will mail you one. It's that simple. Shipping included, of course.
Go ahead, slurp your coffee.
I did that all as a goof. Actually, it's not coffee, it's sparkling ice. They're not sponsoring me, although I will take a sponsorship. Just pointing it out there, my DMs are open. So if you do know sparkling ice, any contacts there, and they want to sponsor Sink, I'm all for it. All right. It's a great drink. Right. My friend, shout out to Derek Miller. Okay, Derek Miller works for these guys, and he's been telling me about this drink for 3 years. All right, so tell you a funny story. Yeah, so I take a nap. I don't like to take naps. I get up early. The dog. I don't have. So I like to Saturdays, and especially Saturdays. I get home from the gym. We kind of hang out as a family, and then I crash for about an hour or two on the sofa. Now my wife will say sometimes it's 3 hours, and that's okay. Sunday I take a nap, and I kid you not. I don't. You know me. Like I don't lie about. Like I'm a straight shooter, right?
Yeah.
To a fault, I'm a straight shooter.
Yeah.
I went. Yeah, you would.
I have.
For a vacant lot lead, you might. Anyway, so I don't even know what that means.
Ding, ding, ding.
Yeah, vacant lot. With raw land, 28G. Give me that lead. You never know what'll happen. Anyway, so I wake up, kid you not, 4 leads in my phone. It's the best nap ever. I was like, oh my God, I'm Sleeping Beauty. 3 buyers who wanted to buy, and I owe a bunch of people I know referrals that referred me, previous clients referred me new clients. I'm forever thankful. Thank you so much. But I'm not even exaggerating when I tell you the 2 of the 3 people emailed me within 2 minutes of each other, totally separate, totally independent, crazy. They wanted to buy a home. The other was a buyer, was a referral, 2 hours earlier. And then 2 hours prior to that, a seller that I had last spoken with, we had texted, but last spoken with in October, finally made the decision. They had to do some things with the house and things of that nature. You know, they don't live in the area. They had to clean out the house, and they want to list the home. All of that happened within 2 hours of each other, all on Sunday, all 4 potential leads. Now, it is not me bragging. It is not me saying I'm whatever. The reality, and all I'm saying to that is that the spring, and I literally said to Francine, the spring market has just begun.
Yeah, no, I agree. I know on the buyer side, I've gotten, I don't know the exact stats, but I could just say in the last 2 weeks, it's gotten extremely active, for lack of a better word. And statistically, and again, I think this is going to have to do with interest rates. When rates come down and start seeing a 5 handle on interest rates, you may have more sellers out there, and that means more listings, and that means more activity. So in the real estate community, we feel like there's going to be 18 to 20% more transactions this year versus last year. And obviously a lot has to do with interest rates, because we know, we've talked about this before, if you're sitting on a COVID rate of 3%, it's really tough to give up that rate and that house and go to a 7 or 8% interest rate. So when rates are when you have a 3% interest rate at the moment, when rates are maybe in the 5s and you have a ton of equity in your house like we have in the last few years, then it gets a little more palatable in terms of putting your house on the market and upgrading, downsizing, doing whatever you need to do to fit your needs. So I think that is what we're going to see in 2024. A lot more transactions, exactly what he's just talking about. And, you know, we've been in down markets. This is not a down market.
No.
This is actually a really healthy market. The only thing we're lacking is more supply.
And some inventory. And again, I've spoken with many sellers. They are, a lot of them are waiting. Again, give a Cliff Note version. Sellers, a lot of sellers, if they didn't buy in 2020 to now, they refinanced at 3%, 3.5%. So they're like looking, all right, well, maybe we want to sell, maybe we want to upgrade, or we want to downsize, or, grandma is not living with us anymore, whatever, a million different reasons. The kids have gone to college, but they're like, I'm at a 3.5% rate. I'm not going to buy something and then be at a 7% rate. Right. The rate, I think, had to be a little more stomachable for them to, I don't even know if that's a word, a little more digestible. There you go. Palatable, thank you. L'chaim. Had to be a little more palatable for them to make that move. And I think as we tick down, as we get closer to, 6, even under 5, I think that's going to happen. You're going to see a lot more sellers sell because, everybody says, well, there's no inventory, but sellers always have to sell. There's always reasons for a seller to sell. And I just named 3. Grandma doesn't live there anymore. Somebody passed away.
Grandma's
unfortunately, there's a divorce. There's a divorce. The kids have gone to college. The house is too big. I can't do the stairs anymore. Right. It's just this house. The house is too small. Oh my gosh, we're having twins.
Gotta move not my daughter.
Not twins. Yeah, not Drew and I are having twins, but yeah, oh my gosh, we're having kids. Or
good story.
We. I don't even know where to go with that. But, so there's always reasons for sellers to sell, and those reasons have existed for hundreds of years. Those aren't going away despite whatever the market or the rates are. And I think that's what's important. And that's what's so important to know from a seller perspective. And the good news is, and I'll end with this, I will say that I would rather be somebody says there's, Brian, I'm a seller. I'm going to sell my house quick, but then I have to buy. I have to pay a higher rate. I'm going to be in a competitive market. But to me, I say I'd rather, this is just me, I'd rather put the real cash in my pocket today from a sale and then have a loan for 30 years with a rate you're probably not going to keep, and you're probably not going to live in the house for 30 years. I almost think it's like a fictitious, in a way it is sort of a fictitious purchase price, because most people don't live in their house for 30 years and they don't pay off their loan, and they certainly don't keep the same rate. Make sense?
No, you know what? Personally, I've had a house for obviously probably 30 years. I never had a fixed rate until COVID. Just because obviously, I start seeing 2s on rates. It's great. It makes total sense. But my entire life, I've always had adjustable rate mortgages because rates come down, they go up, they come down, they go up. You move, you change jobs, you move location. Who knows? So, no, not that has really anything to do with rates, but I'm just saying that's just the mentality. That's just the statistics, of what it happens when you upgrade or downsize or move from one place to another. So use the tools when buying a house, the commitment letter. Use the tools for getting your payment down where it needs to be, and listen to your realtor. Listen, it's really hard. Real estate agents do 5 to 10 deals a month. The average person out there is buying 2 or 3 houses in their life. So you really have to trust the experts, as difficult as it sounds. I'm not just saying that because Brian's here, but you have to trust your doctor. You have to trust your CPA. You have to trust your
dentist
advisor. You got to trust your real estate agent. When a house meets your needs and it's going to be gone in 24 hours, you really can't let that slip through your fingertips, because these examples I used in the beginning from this buyer that we talked about, he actually lost out on a house a month ago and is kicking himself.
And almost lost out on this one until we had a little a talk with them about the market and the reality, and the text that I sent explained things.
We had a coming to, yeah.
Yeah.
Okay. Yep.
All right, so that is all for this edition of Sound Off with Sinkoff, talking mortgages with Drew Aiello of Fairway Independent Mortgage. Drew, I think you should give them your information and tell the kids how they can reach you.
Sure. Yeah, the easiest way, obviously my cell phone's on 24/7, but the easiest way to remember me is drewsteam.com. drewsteam.com takes you right to my website. You get all the information and my contact information.
And Drew is also tagged in this post, so you can click on his name and send him a DM as well. And again, I'm Brian Sinkoff, Sinkoff Realty Group. My phone number is 518-364-9497, sinkoffrealtygroup.com. But you guys know how to get in touch with me. You can also send me a DM or message me here. So for all of us here at the Sinkoff Realty Group, we hope you have a great day. Happy spring, happy house hunting, and we'll see them next month.
Yeah, we'll do this again in March.
Yeah, we will. Let's hope.
All right.
All right.
Enjoy your day.
Peace.